Good morning, traders. This is Michael coming to you from Game Edge on Wednesday, October 1st, first of the month here. As we always get ready for our pre-market prep, we'll look at our three pillars of sentiment, structure, and trend. Again, make sure you check us out on X as well as YouTube. Like and subscribe, and you'll be notified when we go live with content like we did yesterday with pre-market prep, as well as our midday recap. All right, let's jump right into it. Market trend model, as always, based on the tick index, orientation, the bolded white CT, intraday, instantaneous cumulative tick. This is buying versus selling in the overall market. Again, you want to see this bolded CT moving to the upside if you're a bull, above the shorter term momentum moving averages. Up here, new highs versus new lows. Breadth indicator, you want to see new highs outpacing new lows, and you want to see the filtered cumulative tick rising above the zero line and extending to the upside. Again, this is indicating that larger market participants as well as institutions are buying versus selling. Again, plus 1,000, minus 1,000 larger block orders. And then you want to see your cumulative tick above zero if you are a bull. And if you're a bear, obviously you want to see the reverse. We're starting to see the colored ribbon on the tick US here start to flip to the downside. Again, this may be indicating that we're in for a larger pullback in the overall market. If this continues to flip to the downside and the overall cumulative tick continues to live below the ribbon, our tick RC looks slightly different. The tick US is more sensitive, includes all the exchanges, including the regional exchanges. So we'll continue to watch this day over day. All right, moving on to the tick RC. Tick RC looks much better as we're within the overall colored ribbon and extending to the upside on the bolded white line, which is our cumulative tick, and the red is still above cyan. So again, this is larger position or longer look back period for larger positioning for a longer time frame. So again, we're still invested in the overall market. The red is still above the cyan pretty significantly, and you're not seeing that really compressed much at the moment. Again, we talked about yesterday, we're at a transition point within the overall market on the tick. Once we're within the colored ribbon, sorry, it can be a choppy price action. So we'll watch for this to rise outside the colored ribbon and start moving from lower left to upper right with a positive slope for the bulls. And then if you're a bear, you want to see this reject inside the colored ribbon, start moving to the downside and emerging outside the cyan. So again, staying on the right side of the market is about 75% of the battle. And that's what our market trend model is doing with a significant amount of back testing and tag combos that we use for our mechanical portfolios, including our P-Trans to PX, as well as our wheel strategy. So once this emerges outside the colored ribbon, our wheel strategy as well as our P-Trans to PX will turn back on. And if we're within or below the colored ribbon, our wheel strategy and P-Trans to PX mechanical portfolios are turned off. All right, let's move on to the SPX options complex. Again, largest, most notional value. That's why, and largest net OI. That's why we look at the SPX options complex and we separate it in the SPXA and the SPXP. SPXA obviously is institutions, larger market participants. You see over here via the expiries, these contracts do not turn over as rapidly. So we call this the cruise ships. Call dominated above and below spot price. Again, you'll denote day over day. We're still seeing green net deltas above and below. We've seen some out of the money put hedging come in slightly, and then we have our transition areas that are going to be of most importance to stay above. We keep harping on that, but again, getting above these transitions gives you a more positive gamma call dominated structure for a move to the upside. We see that 6,700 is that round Livermore level with a significant amount of net delta and OI strikes there. So again, getting above 6,700 could lead us for a move up a little bit higher. You see PGXs move up to 6,800 now on the SPXA. So again, out of the money call speculation is still alive and well, and we'll look at that with a few of our other tools. All right, let's move on to the SPXP. Again, these contracts turn over much more rapidly, as you can see via our web app and the tiles over here. You can see these are 0DT, and then you can also pick expiries to make weekly expiries or daily expiries. Again, call dominated above and below spot price. You see the green net deltas continues to be supportive on any pullback within the overall market. Again, transition area is very narrow below us. We're looking to open right within the transition area or slightly below this morning where the implied open is. So this is going to be important to get back above for the bulls. Again, putting in a more call dominated positive gamma structure for a possible move to the upside. We see PGX up there at 6750 as well as COTMC. We see COI down here. So this is as we were talking about, close to spot price. You want to see this COI continue to move up within the overall structure and advance. That's indicating that the highest call open interest is advancing to the upside, again, indicating that it could be price appreciation. So we'll continue to watch this. Key level for today, obviously, is transition and getting above for the bulls. If we stay below, we could see a little bit more weakness, and the bears could come in a little bit and pull back us down towards 6,600. So we'll watch that. All right, moving on to the SPX P-GEX ratio, or our gamma edge ratio. Again, we watch this day over day. We want to see this have a positive slope and staying above 1. So we had a quick spike up there to the 1.5 level, and then we've continued to erode back down to the 1 level. Again, call speculators still maintaining overall control, but as spot price goes up, we want to see this SPX P-GEX ratio moving up. This is like a put-call ratio, but we add a gamma component, which is short-dated call gamma versus short-dated put gamma. That gives us our overall ratio. So obviously you want to see call speculation if you're a bull and the ratio running higher as the SPXP is moving higher. And if you're a bear, obviously you want to see this moving lower. But again, we give the edge to the bulls just right at that 1 level, 1.00. So basically that neutral where we could go either direction. So edge to the bulls slightly for being above 1, but we want to see this with a positive slope moving to the upside if you're a bull. All right, moving on to the delta balance for today. We've talked about this. We continue to see we've separated this in the right-hand plane and left-hand plane. The right-hand plane is the green dotted line. This is our out-of-the-money call speculation. Again, continues to erode to the downside. We talked about that yesterday. Moving below the 0 line, and then we continue to move down. So again, out-of-the-money call speculation is not present at the moment. And then the left-hand plane, we're starting to see some negative move to the downside. Also, we're still above 0 though, so that's bullish. The right-hand plane is bearish, but then it's overall overriding the delta balance, which is the aggregate of the two, is with a negative slope to the downside. So we'll have to watch this to see if we stay above 0. But again, cautionary with the delta balance as the out-of-the-money speculation is starting to degrade pretty significantly below the 0 line. The expiries on out in time, you do see those recover. The delta balance goes back up towards the 2nd, and then on into the end of the week towards the 3rd. That does recover to the 1, but then after Friday, we do see this start to come back to the downside. So we'll continue to watch this on out in time for the additional expiries to see if this still leans a little bit more to the weak side or to the bearish side after the next few days and into the end of the week. All right, moving on, the SPXP net stack command. This is high sensitivity levels for today. Again, 6,500 to the downside in the money calls, in the money puts here. This is what we call a locked horns overall look from the delta line. Again, this is difficult for price appreciation. Supportive on a pullback, but difficult for price appreciation to move to the upside over the 6,700 level in the money puts there. We see charm 6,700 out of the money calls. These will continue to grow and be a headwind. And then the out of the money puts at 6,600, as long as we're above that, those will continue to be supportive. And then we see our gamma levels, obviously sensitive, highest sensitivities for today, 6,650, 6,700, and then Havana 6,700, 6,700 if the volatility drops. All right, let's move on to the SPX 0DTE for today. Again, drunken sailor range. This is where we'll see extreme choppy price action as we saw yesterday, and then we started moving above transition and drunken sailor range. We moved to the upside yesterday towards the end of the day. That's what we discussed. So again, if we're opening within the overall transition or below transition, we'd look for more weakness. 6,650 is going to be that downside area. That's going to be the first strike that's important. Bottom of DS is around there. So for below DS, could anticipate some more weakness moving to the downside towards 6,600. Again, this will be driven by the intraday volumetrics. So we'll be watching our Vol M tool. That'll be indicating if we're seeing out of the money put speculation, negative slopes on the put centroid as well as the call centroid, or positive slopes out of the money speculation to the upside. That's the massive market participants and where they're transacting. And are they transacting strikes higher or lower from where the spot price is at the moment? So if thens today, obviously within the drunken sailor range, choppy. Within the transition, choppy. We'd be cautionary on price action there. If we do move to the top of drunken sailor range and start to see a failure, we'd look for a short, move back down towards transition. If we're below transition and get rejected at the bottom of transition as well as the drunken sailor range, we'd look for a short down towards 6,600. Above the drunken sailor range and 6,700, be looking for a move up towards COTMC and 6,750, as long as the market trend model and our intraday volumetrics are giving us a tailwind in that aspect. All right, moving on. Before we get to the trading view chart, GameEdge.us, come check us out. Newsletters, click here. Enter your email. You'll be delivered newsletter over the weekend. It's called Beyond the Bell. Again, goes over all of our thesis, all of our tools, and how to navigate the SPX option structure. Free courses, Game Edge Fast Pass, flagship options course. Make sure you check that out. Again, other 2 courses that are free. These can be delivered to you for your email, for your inbox. And then our pricing tab, click on that. You can come into our Discord, 14-day free trial, all the tools turned on, and then sign up for our monthly, obviously, SPX game plan that's in-depth every day, as well as the Game Edge team in the Discord, helping you trade and navigate the tools, as well as the SPX option structure, as well as other traders from all backgrounds, from former money market makers to individual traders that are just learning how to navigate the SPX option structure. All right, let's move on to the trading view chart for this morning. I've outlaid our drunken sailor range. We've already went over that. And then our trading view scripts, these are available to all of our members and Thinkorswim. These are automated and posted every day, so you can overlay those on your charts for key gamma delta levels. And then I overlaid our 0DT transition, just manually drew that this morning, so you can see where the transition matters this morning. P-trans for all expiries 6660. Again, we continue to reject off of these 0DT levels, as well as the confluence of the full expiries. So when we see this confluence, this becomes a much more confidence interval or confidence of where price action may act or react. And then if we get above that, we'd be looking for a move up towards the top of the drunken sailor range. So we'll continue to monitor this pre-market here. And you see where we bounced. We bounced at the bottom of the DS range at 6650. So again, that's going to be an important level to stay above as we head in today. So that's our if-thens for today. Below transition, we'd look for a little bit more weakness down towards 6650 in the bottom of DS. Above transition, a little bit more bullish, and for the top of drunken sailor range. And then below these levels, we'd be full short with a move down towards 6640, and then ultimately down towards the lows 6620 and 6600. So, all right, thanks everybody for joining us. I have the app up if anybody wants to go over any single stocks, individual equities. I'd be happy to cover those this morning. And here's SPX, SPY, QQQ, obviously P-trans. So we've continued to reject off of that. So you can see how our levels really are important, and we want to monitor the price action around those, moving into a more positive positive gamma call dominated environment if we're above positive transition, or staying below transition slightly weaker, as well as with the SPY 664 P-trans 0GEX 663 there heading into the day. So. All right, TXS. I'm not sure what TXS is. That may not be within our overall universe of stocks. Yeah, TXS is not low OI. Let's go ahead and go back. I'll look at Etsy. I think Etsy has enough options. Yeah, Etsy. Okay, so call dominated above and below spot price. You see spot price below transition, so that's a little bit weaker. You see COTMP down here at 64, so that'd be the first level. I'd look for some sort of supportive type action. Even though we are call dominated, you see PGEX COI here, and you see INGEX at 68, and we're below transition, so that's a little bit weaker state. Below transition on this Friday's expiry, a significant amount of in the money calls or in the money puts above us via the red net delta. So again, price appreciation is going to be difficult. Supportive if we move down into that 64 level, but pretty much weak state here. Even though we're call dominated, I wouldn't necessarily anticipate Etsy appreciating in price very much. So hopefully that helps. Let's look at GLD. Call dominated above and below spot price. Spot price slightly above the larger transition area, COTMP. Or PGEX, COI, 355. So 360 to the upside would be the likely area if we could move up, but we're also above PGEX and COI. So price appreciation probably not significantly to the upside. And then this expiry, this Friday, again, COI is at 362, PGEX 355. So again, 360 to the upside. Expected move is 6 points. So that'd be the most upside I'd be looking for on GLD. So the SOXL. Again, thanks everybody for joining us. We appreciate the interaction, and the midday market recap or intraday. You can also, if Taylor's doing that today, you can also come in and ask for individual equities also. So SOXL, call dominated, right at transition, PGEX COI right at spot price. Not really seeing much price appreciation there. Same thing, you're within transition on all expiries, so probably not a significant amount of price appreciation on SOXL. Oracle, let's take a look at that one. Call dominated, above middle of spot price. Spot price is below transition though on all expiries. PGX CY 300. Good morning, Despina. Sorry about that, everybody. And COTMC 290, PGX COI 290 and 300. So that'd probably be the upside area that I'd be looking for, 290 to 300. So, all right, thanks everybody for joining us. Again, like and subscribe on X as well as YouTube. You'll be notified when we go live. And check out all of our previous content, blog, X, all the other posts that we have also. All right, everybody, make it a great day. Thanks.